Bold Bytes, your bite-sized guide to payments.
Thank you all for joining today. You might notice that things look a little differently on the screen. You're actually among the first to see Bold's fresh new look. We've updated our website and you'll start seeing email announcements roll out later this week. So this is a bit of an insider preview to our new look. This is just a visual refresh. It doesn't change how we operate. We're still the same partner-first team that is focused on transparency, control, and supporting your growth. So what it does reflect is that this is where we're headed. And we've got a lot of exciting updates coming this year. And this is just the beginning. A new look. Today is the fourth education series of 2026. These webinars are designed to help educate the unknown, strengthen expertise, and consider several perspectives throughout the industry. Every month, I will be either presenting or hosting a panel discussion with industry experts to discuss the many levels of payments, of the payments world. Some upcoming topics that we'll be covering include understanding TPE and data integrity in May. And then I'm going to do a follow-up on surcharge violations in June, just to give you an update on the trends that we're seeing and the escalated fines that are coming through, so that you can prepare. Today, we'll be discussing how to reduce frustrations during underwriting, risk, and compliance situations, and the philosophy that can be applied to enhance the experience for everyone. Lose the tension, a guide to merchant retention. We all know that underwriting, risk, and compliance situations can lead to many frustrations, and we see it. And as you know, my team, Patty and I, we see it every day, and we see where you all are coming from, and we want you to know that we understand, and we want to help you navigate through these situations a little easier. So why frustration? Honestly, I have seen it really boil down to two things. It's either something could have been done differently, or someone wishes they had known something before they found out about it. So really, it's either a lack of preparation or a lack of knowledge of the situation. So what can we do to help mitigate that frustration? And my advice to you is to either be proactive or productively reactive. And I know what you're thinking, Stephanie, that is not the saying. It is proactive and reactive. Why are you changing the way things are said? And here's why. Proactivity is all about planning. It's about thinking ahead. It's about knowing the course and anticipating the things that are going to be coming your way so that you can help navigate through it a little bit easier. What happens that we see is that if the proactivity does not occur and there's a lack of preparation, people tend to shift to reacting, which comes with a whole lot of emotion. And if you're in situations where you're dealing with, maybe you have a couple of new accounts that are pending, and one of your old accounts gets a risk review, and then you get hit with a couple of visa violations coming from compliance, it can be very frustrating, and that is a whole lot of emotion to hold on to, and it's incredibly exhausting. So my advice to you is to, instead of just reacting with emotion, be productively reactive. You can still help resolve the situation without letting the emotion get the better of you in those circumstances. Let's discuss how people can be frustrated during these situations. So normally, most of the situations are going to include the merchant and the processor, where we act as the middleman, the partner acts as the middleman. However, we are not the ones that are involved in that contract. The contract is between merchant and processor. So the merchant agrees that they're going to process a specific way, and the processor agrees to provide that funding and that support and be the avenue for their transactions to go through in order to create to have that agreement in place. So where we see merchant frustrations in underwriting, it's going to be usually a negative past experience with other processors. So that can lead to mistrust, hesitation, not really wanting to provide any information up front because they just feel like it's not going to be worth their while. Or they have lack of education. They don't know the why. They don't know why you need these documentation, the documentation that's being requested. They don't know why you're gathering all this information. I discussed a little in my previous webinar, the one from March, where we discussed foundational KYC, asking a lot of intensive questions in the beginning. They could very well be hesitant in accepting that because they think to themselves, this is not something I've experienced before. So why are you doing this and no one else has? And it can be a little daunting to them, not being able to understand. Then in risk situations, they can feel frustrated because their funding's been disrupted. Now they don't have cash flow coming through. They feel like their business is under a microscope. They're worried that they have done something wrong they didn't know they were doing, or they could be worried that they've been caught doing something wrong that they didn't know they were doing. Either way, it can cause some serious emotion. And then during any compliance inquiries, they're going to have pressure to make changes without really understanding the full scope as to why. And there's the fear of the impending fines that are coming through from the card brands. And some people are getting the fines even though they've been made compliant, but the violation that has been submitted and investigated is from a past situation. And it's becoming something where the merchant is the victim in this situation. And we can definitely understand where they're coming from and we can empathize with that. So being frustrated with an industry that changes rules and regulations without really them agreeing to it, right? They don't have any control over this, so they have to kind of roll with the punches. And then frustrations on the processor side are usually more about risk mitigation, loss, making sure that they're following the requirements that are being put in place by the acquiring banks and the card brands, because it is their job to, as the processor, to comply with those things as well. So in the underwriting portion, they're usually they're trying to lessen their loss. So they're really trying to understand, mitigate what loss exposure they could have, and trying to get ahead of that as much as possible. And incomplete information leads to approving a merchant account without really knowing the whole story. And that can be frustrating for any processor. During risk, the information provided during underwriting doesn't really match the behavior of the account. And that can be frustrating because what we decided on and what we agreed upon, you are not doing. Why should I continue this relationship? Now I'm holding your funds until we figure this out. And that is exactly where their thought process comes from. Failure to investigate during a known fraudulent situation is actually something that it can lead to issues with the banks and the card brands. They are required to look into any situation that could be fraudulent or could be causing any issues, and having a loss that comes with it. So it is their job to do that. And then during compliance, mostly their frustrations come from the fact that they have zero control over this. They get issued the fines and they have to pass it to the merchant. They are not the ones that are making these decisions. They are literally just the person that is taking information from one side and moving it to the other and acting as a conduit from the card brands to the merchant. And because they get these notifications, they are required to investigate. They're required to confirm that the remediation has been put into place. And that is the basis of where they are involved in the situation. So it is between merchant and processor always, and we're always acting as kind of the middleman. So applying the 4 rules. Number 1 is going to be driving towards simplicity. So making the situation more palatable and more understandable for all parties involved. Number 2 is going to be the active thinker. I've said it before and I'll say it again. The merchant doesn't know a lot about this industry. They are new to understanding the payment side of things. So it is our job as advocates to help our partners grow and have the information. And then it is your job to help the merchant grow and have the information. So being that active thinker and thinking ahead and having number 3 in place, which is establishing the next steps, will help create that smoother experience for everybody and really allow the merchant to understand that you are there to help and that you are not an enemy in this situation. And then number 4 would be consider the other person's perspective and address it. And that goes for both merchant and processor. And I'll go through some examples along the way as we go through the different levels. Underwriting. This is where most of the proactivity can be done. So with underwriting, you can be as proactive as possible here, and that will lead to smoother experiences along the way. So in my KYC foundational webinar, we discussed about really identifying the industry and the questions to ask for that industry. So today what I'm going to do is I'm going to really use the example of a restaurant. And the reason behind that is because restaurants can range anywhere from being counter service, where you walk up, you order food, you pay for the food, and the food is handed to you. Very low risk, very low maintenance, very understanding. That can lead all the way to a restaurant that has not only normal table service where there are card present transactions, but they might have rooms in the back that are designated for corporate events, large parties, weddings, things of that nature. And so you've now shifted the risk exposure just from one room to another. And those higher risk examples for a concept such as that is the fact that you have now much larger transactions. They're most likely going to be keyed because not many people have just $30,000 that is going to be able to run through their credit card with no problem. So usually it has to be keyed in, or they provide that credit card information well in advance, and then it is applied to the payment at the time of service. And so it's not actually being inserted or swiped at that time. And that can lead to a disputed keyed transaction 100% leads to a chargeback that will go against the merchant, and the merchant will be responsible for that negative balance. And so it increases the risk exposure. Deposits also increase the risk exposure. So if a merchant is receiving any type of deposit before the delivery of service, they are now extending that time in between the time of payment and the time of delivery. And that causes a huge frustration for the processor if they are not aware of it. Because just like with a merchant, imagine you're a restaurant owner and a person walks in the door and says, "Hey, I have a 100-person wedding that is literally parking the car, and we're here. We want past hors d'oeuvres, we want a prefix menu, we want an open bar, and we're all going to be in the back. Do you have a projector that we can set up?" What would it do to that merchant? The merchant and the host stand would probably melt down. They would not know how to react in that situation because they were not prepared for it. So with that same type of preparation that would be done for creating a private event at a restaurant is the same type of preparation that you as the partner need to provide to the underwriter during the onboarding experience so that they're aware of that type of transaction as well. Because just like a merchant wouldn't want $100 or 100-person party to walk in the door last minute, the underwriter doesn't want to, or the risk department and the processor doesn't all of a sudden want to see a $500,000 transaction come through when they weren't prepared for it either, because that breaks trust in what the agreement really was. So asking the right questions, understanding how the facility works, really getting an understanding of how they function will help underwriting know the full scope of the merchant and be able to move forward confidently and have the risk exposure and the risk reviews that could happen later really get mitigated in that process. So ask the right questions and even collect some example executed invoices, some contracts, examples, just so that they have the ability to understand what the merchant offers and how they receive payment in that process. Communicate the why behind the due diligence. So as I mentioned, there could be some hesitation. Why are you asking me all these questions when I've never had these questions asked to me before? These are situations where you want to be letting them know that this upfront information gathering is actually to help prevent future surprises for risk. We don't want risk to have any surprises because that will lead to funding holds. So let's do the due diligence now so that we're actually creating the narrative in full for the underwriter and for the processor as soon as possible. And then address concerns in providing that extensive data. So there could be trust. Something that I have told people throughout the years is that risk is a relationship. You don't understand how much they really rely on the information that we give them in order to move forward confidently and comfortably with the relationship. So just like a new relationship, if you were to meet somebody out on a first date and they told you everything you wanted to hear, they told you, you matched up completely. Every single thing was exactly how you ever pictured, and then a week and a half later you found out that they're actually a serial killer or they torture puppies. That would be a real break in trust, and that is exactly what a relationship is with risk. You want to provide the information of how you actually act so that they're not surprised and that they can understand that, oh, a large transaction came through. We discussed this during underwriting. Large transactions are allowed. And this seems to match the exact type of information that we saw on their prior processing statements and things of that nature. So helping alleviate that trust by letting them know that it's a new relationship, and the processor doesn't know them just by the numbers that we place on a merchant processing agreement. And then going through the documentation requirements and why. So prior processing statements, that usually is to help verify that how the merchant is saying they're going to be processing has been vouched for before by a different processor. So in circumstances of a merchant being boarded with, let's say, a $500,000 monthly volume, the underwriter wants to understand that you have done this before and that that there is a separate company that has stated that you are good to go and that you have been with them and that they were able to provide you statements, and then we can move forward with that relationship. Bank statements are always going to be to make sure that the merchant is credit qualified to withstand any losses that come to their accounts. That includes large ticket chargebacks, if they do a lot of refunds, and just understanding that their account balance is normally going to cover what they're saying their average ticket sizes, their large ticket sizes, what have you. If the business cannot be verified on the internet, or if they look and they say, well, this merchant has absolutely no marketing exposure, yet they're expecting to do $500,000 in monthly volume. How is that possible? That is where we have issues, because you're saying you're able to do something without absolutely any information backing up on how you're doing it. So business licenses, proof of marketing, things of that nature will help them verify that you are a legitimate business. And then again, contracts and invoices for helping with those large ticket conversations. So applying the 4 rules to underwriting, starting with simplicity. So the processor doesn't know the merchant. You have the opportunity to build that narrative and give the processor the information that is needed to help them understand what the merchant does and how they function. Be the active thinker. So you know what underwriting would normally need. So doing that extensive KYC and knowing the industry will help you understand the higher risk examples and then have those conversations earlier so that you can prepare everybody for what's coming. And then establishing next steps. Confidently submit that information to underwriting while also providing the merchant with legitimate timing expectations. So underwriting could look at the information and say they need more. They could have some questions about some of the information that you provided. They might want to know, how frequently do you have weddings? How frequently do you hold large events? Is this something that is a normal part of your business, or is this something that happens occasionally? They might ask more questions. So prepare the merchant that there might be more information needed, but that you will communicate that along the way. It'll just kind of help spread those breadcrumbs to make sure that everybody is on the same page. And then addressing the merchant perspective. So from the merchant side, they could have hesitation in providing the sensitive information. So reiterate the goal of the due diligence. And then from the processor side, they want to mitigate loss. So provide that accurate information so you can have a more seamless and transparent process that goes through underwriting, and the merchant account can be boarded with a lot less friction. So risk, being productively reactive. It's very difficult to be proactive with risk. Really, the proactivity, as I mentioned, happens during underwriting when it comes to risk situations. So this is where being productively reactive comes into play. More times than not, we reach out to somebody and we get a frustrated response where they want to fight back on the system as opposed to understanding why this happened. So being able to relay the message to the merchant as to why this review is happening will help. And more times than not, a risk review really falls under the examples that I provided, which is operating outside of parameters. So we discussed that you would process this way. You are not doing that. They want to investigate as to why. Chargebacks or friendly fraud concerns. So that would be situations where maybe there's a lot of declines for suspected fraud, and then a transaction goes through. That can lead to chargebacks. That could be somebody really like, oh, just keep trying to insert the chip and it's not working. Oh, well, maybe just try keying it in. Oh, it worked now. And it's because that card is stolen and it's using stolen information. So making sure that the transaction belongs to the person that is running it. Operating outside of industry boundaries. So I've made this example before with several of you, which is we actually have had a situation where a merchant sold their car through their pizza establishment, and that is not something that they can do. So we have had to investigate that, and that was a very interesting response to move forward with. And then self-pay. So we've had lots of incidents recently where a merchant has basically gave themselves a cash advance where they charge their card, they then get that deposit, and it acts as some nice little money for them to use. That's against regulations. That's not something that's allowed. And if it is outside of what their parameters say, it will be flagged, it will be investigated, and it will have to be refunded. So it causes a lot of headache. So identifying the situation and explaining it to the merchant so that they're aware that this isn't someone out to get them. There's legitimate concerns that are here. So you can be their advocate while also educating them on the situation simultaneously. You don't have to pick one. We do the same thing for you all. So if we get a risk review and the information just doesn't really make sense, we understand why certain parts are being reviewed, but other parts we're not really understanding. We'll still send you all the review. We'll still send you the information so that you can get started on it so that we can lessen the time that the merchant's funds are on hold, while also reaching out to the risk department at the processor and asking them why and trying to figure out what's going on their side of what they saw. So communicating the why behind the requested documentation, we usually ask for the same things over and over again. And the reason behind them is always the same reason. So for an itemized invoice and full cardholder information, this is to help the processor confirm that what was agreed upon for payments and services is agreed upon from both the merchant side and the cardholder side. So ensuring that the cardholder is not going to dispute the transaction, saying that they did not receive their goods and services, that it wasn't fraud, that it, whatever the case may be, it's put in place so that it can help verify that agreement and mitigate that loss. Bank statements. So again, this is credit qualification for covering potential loss. Any negative transaction that is enough, is a batch that is all refunds or a batch that has a large refund and some smaller transactions. Anything that goes as a negative value will automatically go to the merchant's bank account. And if their bank account is not credit qualified or not supportive of that action, that causes issues and potential further loss for the processor that they would be holding on to. So if you normally settle batches for, let's say, $2,000 a day, and then you run a $30,000 keyed transaction that could very easily be disputed because you have no cardholder information, you have no invoice, you have nothing to back up this transaction. You now are basically asking the processor to trust that you have 15 days worth of batches in your bank account readily available to cover this loss if it comes through, which is usually not the case for small businesses. Their profit margins usually less than 10%. So that is a huge ask for the processor to be okay with. NDX, so this is a non-deliverable risk, and this is basically the time in between payment and providing the goods or service. So this is where deposits come into play. It expands that risk exposure and causes issues. And usually we do not find out about that NDX until a risk review has already begun. And it's because in underwriting, no one mentioned that they take deposits. And now we're having to shuffle to fix the issue as opposed to being prepared for it. Future payments. So if it's a large transaction that we've seen, or a couple of large transactions that we've seen on the same card over and over and over again, this could lead to cardholder concentration concerns and just understanding the customer merchant relationship. So this could be a situation with self-pay where they have self-paid multiple times, and now we're having to go back through and say, okay, every single one of these cards that you have on here and most of your credit card transaction history is from your own credit card, that's a problem. And so these are situations that risk needs to investigate because they're potentially fraudulent, they can provide loss, and that's something that we need to get ahead of. Communicating support and transparency. So you don't know what the variables that the merchant provided are going to be perceived as in risk's eyes. They could see something in the information that we provide that completely changes the trajectory of where we were going with the risk review. And we could have thought everything was fine, only to find out like all of their transactions are for the owner of the account, not some other cardholder. And providing them those breadcrumbs again in the beginning to let them know that you're here as support and you're going to do everything to follow up, provide updates, and you're going to do everything you can to get this risk review closed out so that you can resume funding, but that you have their back. You're going to advocate for them because you are their connection from them to us. And so that's where we also, my team is very diligent and vigilant on making sure that sense of urgency is well established. We have actually had people on the risk team at the processor that we have requested to no longer work our cases because they don't work fast enough. So we want to make sure that we are providing you all with as quick and as white glove service as we possibly can. And we don't expect anything less from you to your merchant. And so we are always going to be there to support, and just communicating that support to the merchant as well will help. And then again, just addressing concerns about fear in providing that sensitive data. A lot of people are hesitant about providing their bank statements because they don't want their transactions to be under a scope. They don't want you to say, hey, why did you go to Chick-fil-A 12 times this week? They don't want that type of scrutiny. So they tend to be a little more hesitant, and we understand that, but we also have to provide things in order to complete reviews. Applying the 4 rules to risk situation. So simplicity, explain the reason for the review and the requested documentation. So often we have merchants or partners reach out and say, hey, the merchant's really frustrated. They don't want to provide this, that, what have you. And either myself or Patty will get on the phone with the merchant, have the conversation, and they go, oh, okay, yeah, I'll send that right over. And they're perfectly fine with understanding why. So sometimes it's just about letting them know the reasoning behind it so that it doesn't seem so out of the box. It can feel a little bit more tangible to them. Being the active thinker. So we can get things resolved quickly on your behalf if the information that's provided to us is accurate and also provided to us quickly. So if if a risk review goes on for about 2 to 3 weeks of us requesting updates and not getting the information, and then 2 out of the 10 pieces that we requested are sent over along with a request to escalate the hold removal. That does nobody any favors. Not one person from the merchant to the processor is comfortable with that situation because we don't have all the information to accurately confirm the review is legitimate. And now we're requesting a rush full of emotion and having to turn back around and say, we can't. Unfortunately, we cannot rush this request because we don't have everything we need to successfully move forward with the review. So provide the accurate information as quickly as you can. Establishing the next step. So be present and transparent for the merchant and communicate often by providing updates. Let them know I've requested an update. This is where we're at. It's under review. It's been escalated for management, whatever the case may be. Just stay in communication with them. And then adjusting the perspective. So from the merchant perspective, funding disruptions are their lifeline. And we want to do everything we can to solve that problem. So providing that sense of urgency and showing that support throughout the entire process will help them build that trust with you. And you will no longer feel that friction because they understand you're doing everything that you can, that there's legitimately another level that is handling the situation, that is calling the shots. And then from the processor perspective, they want complete information so that they can confirm the behavior is legitimate. And they want to make sure that how the merchant was set up is how they're operating. And if we're not able to provide them with that accurate information up front, during underwriting and then again during the risk review, and we're constantly applying friction because we don't want to provide what they're requesting, what does that look like to the processor? You're not willing to even cooperate with us, yet you're asking for us to just trust you. It doesn't really work that way. It's a relationship. So we need to make sure that we're working together. All right, compliance. So this is my favorite part because you get to be proactive and productively reactive. What? So long story short, Visa is not slowing down their compliance efforts. Not at all. It is not about if Visa is coming to knock on your door. It is about when Visa is coming to knock on your door. So many people, even on this call, have experienced me reaching out recently with issues that have been going on. So it is important to identify the merchants that are still non-compliant under your portfolio. If you need help confirming whether or not something is compliant, please feel free to reach out. One of our partners has been very diligent on making sure the information that they're providing their merchants is correct and confirming with me along the way. And I'm happy to help in that situation. Those last couple of weeks have been a little hectic, so I will definitely be getting back to her soon. But it is our number one priority to make sure you have the correct information so that you can pass it along to your merchants and get them compliant as soon as possible. Proactively reach out to those merchants who are non-compliant and communicate the expectations and the possibilities of fines that are coming down the pipe. So having a very transparent conversation about there are changes in regulations that we have literally no control over, and they are leading to escalated fines. And so we just need to start having this conversation and making moves as quickly as possible, because that is you trying to protect them, not us reacting to situations that are coming through. Mind you, some of the violation notifications that we get are for transactions that were 6 months to a year ago. So the merchant's already been made compliant. Visa doesn't care. They have a proof of non-compliance and they are reaching out now and they are assessing fines and fees along the way. So we want to get ahead of it as quickly as possible. We may still experience situations where a past transaction is flagged. All we have to do is provide proof of compliance to show that everything's fine, and then no further fines come through because the issue has been resolved. So we've had to deal with some situations where the timing is overlapped with past violations and we've had to push back. And unfortunately, Visa has stopped allowing that pushback. They are basically just saying it is what it is and move on. And it's very frustrating because they are such a huge company that you would think that they would have a little bit more I don't even know, maybe organization. I think that that's wishful thinking, but we want to be able to not give them any more money. So unfortunately, sometimes it doesn't work out that way, but other times we can do everything that we can. And so be productive with that, or be proactive with that. Really reach out to the merchants that you know for a fact are not compliant right now, still using non-cash adjustment or surcharging without bin lookup or surcharging over 3%, whatever the case may be. Address it as quickly as possible, get them compliant. And address concerns for the merchant about spending money to make changes. I see so often the conversation is, well, we don't want to update our menus to dual pricing, or we don't want to update our menus or our costs to the higher card price, or we don't want to do this, or we don't want to do that. Ask them one question. Would they rather invest in their business, or would they rather give $1,000, $5,000, or $25,000 fines to Visa that they will never see again, and they will not get back, and they will not be able to dispute? It will just be now Visa's money. Which would they prefer? Because for me, I know my answer. Invest in my own business. Change the menus. I understand as a business owner, there's other logistics and variables that go into it. So I can't speak for everybody, but ask them that question, and I will pretty much guarantee that their answer will align. Applying the 4 rules to compliance situations. So simplicity. Card brand regulations are being enforced and it's not stopping. We have no control over it. So that's as simple as it gets. We need to make moves because a much larger company is the one that's calling the shots right now. Be the active thinker. Know who is not compliant and proactively make those changes. Establishing the next steps. So building a merchant specific plan. So what might work for one restaurant in your portfolio might not work for the other restaurant in your portfolio. They might be using 2 very different systems. You might have one that's set up on Focus and one that's set up on Spot On or Aloha. You might not have the functionality that matches for both of them. So figure out where it is that you need to go in order to make those changes legitimately for how they function, and work with them to make that plan. Start now. Set the breadcrumbs, start the conversation. Let them know that these fines are coming so that the surprise is not there later on. And then addressing perspective. Honestly, I didn't put the processor's perspective in here because they're in the same boat as all of us. It is, they can't do anything about it either. This is coming from Visa. It's going to the acquirer. It's coming to the processor. It's passed to us. We pass to you. We pass to the merchant. That is how it is. So there's not really anything that they can do and how we can address their perspective. But what we can do full force is address the merchant's perspective. So we want to protect them from the escalated fines, and we want to invest in the merchant, not pay Visa more money. That's just number one priority for me specifically. That's my whole goal. To wrap up, adopt the 4 rules philosophy. Apply it to these situations. It will significantly lessen the frustration for everyone involved because they will understand where everyone's coming from and know how to move forward together. Know when to be proactive in certain circumstances and when you have to be productively reactive. Try to steer away from letting the emotion get the better of us. This industry is what it is. We can do what we can to change. I specifically have worked with the head of risk at the main processor that we work with for a few years now, and we have established clear ways of communicating, clear paths for how we handle certain merchant types, making sure that certain HIPAA compliance situations are managed differently. We have handled situations together and made changes. That is not something that can happen on a broader scale, especially when it comes to compliance. So making sure that you know when you can be proactive and actually take the lead, and when you need to just figure out what the answer is now and not have all of the emotion pulling the cart. So driving toward transparency and authenticity. The merchant wants to understand why you are able to provide that information. Sometimes the information is not great. Sometimes the information is a little obscure or might have some ambiguity to it because we don't actually know. That's fine. Be authentic with it and let them know that you're in it with them. and that we're all gonna move forward together no matter what. Educating the merchants on the why in all of these frustrating situations so that you can level the playing field. You can understand, they know where you're coming from, you know where they're coming from, and everyone knows that we all are on the same page and that we are in the same boat and we are going to get to the other side together. And providing support and advocacy, building trust. So this is something that I will continue to say. Build support, advocacy, advising, educating the merchants along the way is going to be your greatest tool and your greatest value prospect, because you are actually providing something that a lot of other ISOs, agents, and processors just do not provide. What is the most outrageous and funniest funding hold you've ever released? Most outrageous, I would say we had an experience with a merchant who one of our partners had actually passed on, and that merchant kind of fell through the cracks in this time, and they had gotten an ACH reject, and we weren't notified. Like, for some reason, nobody was notified. No one knew about this, and a couple of years went by, and we ended up finding that they had $3 million on hold, and we worked to get the funds released, but we had to do it in wire transfer because it was such a big amount. So having to call the merchant and explain to them that I had $3 million to give to them and that I needed their wiring information was quite the experience, because I had to basically tell them I was not the Prince of Sudan, and that I was a legitimate human being, and they could come find me at my place of work if they wanted to. And that was a fun experience. So I got to work with them and really provide reconciliations and build trust with them, that has gone on for years now. So it was definitely a fun experience. Will the held funds release if the risk review is not closed, let's say for after 6 months? Great question, Lisa. So it depends. It depends on the variables, and it depends on the situation. So we've had situations where the transactions have not been able to be verified, and they do need to be held for about 270 days to confirm that no chargebacks or disputes come through. So in situations like that, the transactions will be held even if the review can't actually be closed, or it will be closed in that circumstance without really having an understanding of how to move forward. It'll just say, we'll just close this and figure it out. We've had situations too of EBT fraud, where the funds will be held and the account will be closed due to fraudulent activity, and those funds will not be released at all, because they are considered fraudulent, and they do need to be basically released to the state and the federal government, because they are not anybody's. They're a fraudulent transaction. It really depends on the situation and the variables. If you have a specific example, feel free to email our risk team. I'll put the contact information up on the screen. Feel free to send the question or the example account, and we can look into it for you for sure. Is the process to increase the monthly volume the same as a change in the account, or just having invoices that show the customer businesses? Sergio, that's a great question. I would say that it depends on how much it's increasing. If it's a normal volume increase just based on the inflation of the account, like over the time that it's been with us, it's just naturally increased. Those are things that risk does already put into perspective. So increasing it, anything along those lines, would be a little bit different. If it's a legitimate jump in business functionality, that would be a bigger conversation with underwriting and risk on what is changing and why and how frequently to expect that information. So let's say an account is boarded with a $30,000 monthly volume, and then we start just having transactions that are $30,000 come through, and they're planning to really do more of $1 million. Likelihood would be that we would need to re-app on a new mid so that it can be underwritten for the correct functionality of the new way that the new functionality of the way the account is going to be processing. So It really depends on the situation, but I'm happy to work with you to gather that information. You can also reach out to our partner support contact team, so the PRM at boldpay.io, or working with any of our growth management team. They will definitely be able to help you guide in that general direction. And if they have any specific risk questions, they can reach out to me, and I can help along the way. So great question though. Definitely, definitely. All right. Well, I don't seem to have any other questions coming through. So thank you all for your time today. I look forward to talking with you. Feel free to reach out if you ever need anything. We are here. Have a good one. Thank you all.
Bold Bytes, your bite-sized guide to payments.